Hello and welcome to another episode of the Finrestra podcast. I am Jan Muscholt. In this episode, I want to argue that European banks and especially euro area banks are undervalued. But first, let's do a very quick recap of the news, not just of the last weeks, but since the beginning of the year. So the things you may have missed already or already forgotten is that Croatia joined the euro area on January 1st. The big news, and last year I was always talking about how inflation was rising, but now euro inflation is coming down very quickly. Just for reference, it was still above 10% in November of last year, and now at the last reading it was 6.9% in March 2023. And then, of course, what gained most headlines was that in March there was some kind of a banking panic. So in Europe, but outside of the EU and outside of the euro area, Credit Suisse was on the brink of collapse and it was taken over by its rival UBS. So I'm not going to dwell too much on that because you can listen back to the emergency episode about the problems at Credit Suisse. The main thing to remember is that it was taken over for about 3 billion Swiss francs for UBS, which was a huge windfall, it should be, for UBS, given that the book value was much higher. And also some of the AT1 bonds or the AT1 bonds got wiped out. So basically, UBS acquired about 50 billion in book value for about 3 billion, if I remember the numbers correctly. And then there was a lot of panic on Twitter about are the banks in trouble and blah, blah, blah. But as we've seen, it was really located to the problems in a couple of atypical banks, which had strange assets like Silicon Valley Bank, or had problems at the liability side with panicking depositors, both at Silicon Valley and also at Credit Suisse. But that's not typical for the average European bank and definitely not for the average euro area bank. So, but that's all in the past. And what I want to do in this episode is speculate on what 2023 will bring for euro area banks. And especially at the end of the episode, I will make some predictions that we can revisit in the beginning of next year, because I will do some very specific predictions about profits and profitability of banks. So this should be a fun one to listen back 1 year from now. So what are my arguments to say that euro area banks are undervalued right now? So, of course, to fight inflation, the ECB has increased interest rates, and also market interest rates were already rising before the ECB started the hiking cycle. Actually, the yield curve was already shifting upwards. So what this means is that on the revenue side, rates on new loans are going up, and they are going up very, very quickly. Of course, most of the assets of banks are in longer time loans like mortgages, or they've maybe invested also some part of their assets in long-term bonds. However, these gradually mature, and then the banks can reinvest or make new loans at much higher rates. And one thing that I think a lot of analysts have not fully grasped is that euro banks have more than 10% of their balance sheet at the deposit facility of the euro system. So until very recently, until actually I think it was June of 2022, the banks had to pay a negative interest to the euro system, to the ECB. Although some of those reserves were exempt from negative deposit rates. Currently, they get 3%, and it looks like the ECB still has enough hawks that in May they will increase the deposit rate further, so maybe to 3.25% or even 3.5%, which will be a huge boost to the profits of banks. Of course, banks don't just have assets, they also have liabilities, and most of their funding comes from deposits. And there's a very useful website called Euro Area Statistics, which I will link to in the show notes. And there you can look both in the aggregate of the euro area, but also for individual countries, the average amount or the average interest rate that banks pay on different types of deposits. So typically, people and businesses have current accounts, which are also called checking accounts or sight deposits, which are overnight deposits, so you can withdraw your money at any time. And there, the interest rates have gone up, but much less than the deposit facility rate of the ECB. So maybe now banks pay 0.3% or 0.5%, but they're still able to fund their assets at a very low rate, especially compared to the loans they are making now. So for interest income, so the banks have a lot more interest income on the asset side. They have more interest expenses at the liability side, but overall the gap, so the net interest margin, should stay much more elevated in 2023 than we saw the last, not just in 2022, but even going back all the way to 2015 or even further. So that's why I think that when it comes to net interest income, the banks will have a huge source of revenue this year. What other kinds of income do banks have? So, of course, they also have non-interest income, which consists of fees and commissions and trading income. So last year was a bad year for these types of non-interest incomes, because following the Russian invasion of Ukraine, stock markets tanked, and also like the price of fixed income assets like bonds went down. So I think that 2023 cannot get much worse. So I think when it comes to fees and commissions and trading revenue, this should be at least the same amount as last year, and probably banks will also be able to charge some compensation for the inflation and like higher prices to their customers. So I think overall revenues will go up at banks. Then one of the major costs is of course labor costs, and there I think that banks have invested a lot in recent years in automation and in digitalization. So labor costs will go up pretty much in line with inflation, I would guess. But this shouldn't be too much of a cost to banks, and also not be a drag on their profits. So I do think that net revenue, even if we subtract the higher labor costs, will go up. And so the cost to income ratio should probably go down, if I am correct. Something that's more uncertain is credit risk. So of course, if we go into a recession typically, then people and businesses will default more on their loans, and then banks have to put aside money to deal with these credit losses. However, I would argue that in nominal terms, people and businesses got some kind of a debt jubilee thanks to inflation. So you've probably noticed that businesses have tried to protect their margins by raising prices. And most people, workers or even people on pensions, have higher incomes now, thanks to negotiations or strikes or the index mechanism like in Belgium. So that means that if you have fixed debts, I mean with fixed interest rates, now you earn more to service the same debt. So I think that, yeah, if nothing very spectacular happens, I don't really see how there will be a severe recession. So the cost of credit losses should be quite limited. And I think that banks will earn a lot of money this year. Maybe something else that I wrote down as a huge uncertainty is, will the ECB change the conditions on the deposit facility? So somebody like Paul de Groowe, who is a Belgian professor at the London School of Economics, has been trying to convince the ECB that it shouldn't pay as much interest on the deposit facility because he says it's like some kind of gift or subsidy to banks. Yeah, I'm not gonna say what I think about that, but the risk remains for banks that if the ECB were to change the interest rate on the deposit facility, if they would put some kind of cap, that would have a huge impact on the profits of banks. And especially I have a list of banks, and I'll probably make a short YouTube video about which banks should profit most from the higher interest rate on the deposit facility. So, but if the ECB decides to change the deposit facility rate, that could have a negative impact on the income of banks. And I am specifically listing this as a risk because, for example, for the TLTRO, so the TLTRO, which was some kind of lending program of the ECB to commercial banks, there the ECB has changed it like I think 7 times, the conditions at which banks could borrow under that program. So it's not unprecedented that the ECB would change its mind, and that would have an impact on the revenue and the profit of banks. And then the final uncertainty, or something that is not very clear yet to me at the moment, is how banks will fare if they have to repay most of the TLTRO in the summer of 2023. So most banks, or a lot of banks, have a lot more reserves than they borrowed from the ECB. But especially Italian banks and even some specific German banks actually had borrowed more under the TLTRO program even at the end of last year than they had at the deposit facility. And so what is not clear yet is how they will make up for that funding shortfall. So will they be able to replace the TLTRO funding with interbank funding at probably somewhat higher rates? Or will they try to compete for deposits in countries like Italy, which will drive up the interest expenses for the banks? Is something that is hard to predict. Now let's make some predictions. So I think that at current prices, so I am recording this on the 16th of April. So if you're listening to this in 2024, you can check out the stock prices. But I predict that some Euro banks are currently trading at less than 4 times their 2023 profits. So this is the net profit, so after tax. If we look at the pre-tax profit, some banks are probably even trading at less than 3 times their profits. So I think like specifically banks like SocGen, so Société Générale, or Deutsche Bank are probably trading at less than 4 times their profits right now. Another prediction about SocGen: all banks have to publish under EU rules their revenue and profits and taxes they pay per country. And for SocGen, they usually post a loss in France in its home market, because of course it has a lot of how should I say it, like the cost centers are in Paris. But I think that SocGen will make a profit in France. So this is kind of my second prediction. So if you look at the country by country reporting in next year's annual report of SocGen, I predict that it will post a positive profit in France in book year 2023. So on to the third prediction. I predict that banks like AIB and Bank of Ireland, which are both Irish banks, and also SocGen will actually double their annual profits in 2023 compared to last year. So why specifically these banks? Well, the two Irish banks, AIB and Bank of Ireland, have more than 20% of their assets in the deposit facility of the ECB, while they have fully repaid their TLTRO loans. So if I assume a deposit facility rate of 3%, this will be a huge boost to the profit of the Irish banks. Even taking into account that they will need to fund the deposit facility or the reserves and the deposit facility at somewhat higher rates for customers. And then the SocGen profit is basically assuming that it will keep its revenue and also get a boost from the higher interest rates. But in 2022, there was the one-off write-off of Rosbank, the Russian subsidiary, which it sold, unlike, for example, Raiffeisenbank International. So the sale of Rosbank led to a one-time slash in profits for SocGen. But I think if they don't have any significant problems, then the profit of 2023 should be about double what it made last year. And then as a fourth and final prediction, I think that 2023 will be the most profitable year ever for Eurobanks, not just in nominal terms, but also measured by the return on equity. And I think to check my prediction, it's best to check the risk dashboard of EBA, of the European Banking Authority. So they have a very useful dashboard where they publish for a selection of European banks all kinds of statistics like the cost to income ratio or the share of revenue or the return on equity. And so my prediction is at the end of the year we will see that the return on equity of Eurobanks will be the highest since EBA kept these statistics since I think 2014. So to recap, I think that some banks like Deutsche and SocGen are trading at less than 4 times their profits right now. I predict that SocGen will make a profit in France. I predict that AIB, Bank of Ireland and SocGen will double their profits. And I predict that the return on equity of European banks will be the highest it's been since at least 2014. So this has been another episode of the Finrestra podcast. As always, you can find me on Twitter at Jan Muschoot. That's at JANMUSSCHOOT. Or if you want to contact me for something else, you can always email me. My email is jan.muschoot@finrestra.com. So thanks a lot for listening, and till next time.